Hello and welcome to my next review of the What are the Markets. Well, today is the 1st of June and the beginning of a new month. But as we all know, last Friday, the month of May did not end very well with a massive MSCI index rebalancing driven 21,000 crore sell off by the FIIs, while DIS did their best to support the market with a 16,000 crore buy on Friday. Well, today the market started positive because that was a one-off correction of the rebalancing day, and there was probably a little bit of short covering and news settings on the F&O side because of the beginning of the month. But very quickly, the market lost its steam, and the large cap index ended at 0.7% negative. Mid cap, small cap, micro cap, all were around the 1% to 1.5% down today. The advanced decline ratio was heavily in favor of the declines. About 900 odd stocks only advanced, but around 2,100 stocks declined. So you can summarize that there was all-round selling today from the retail and HNI counters because of the breadth of the sell-off. Because when you look at the flows data, FIIs sold about 4,000 crores and DIS bought about 5,000 crores. So they matched it, but clearly the signals were negative because almost all the sectors ended in the red. So what are the factors driving this? Well, first of all, on the geopolitics front, on Friday, we saw that there was actually a reasonable strengthening of the crude in terms of not strengthening of the crude, but favorable decline of the crude to about below 93 to 92 levels. And despite that, we had said the market had fallen off. But over the weekend, the geopolitical situation has gotten worse with strikes from America on Iran sides and Iran claiming a counterattack on an American airbase, and more importantly, Israel attacking Lebanon. And Iran has always been saying that Israel's stopping its attacks on the Hezbollah and Lebanon is a part of the deal. So clearly, the deal is going nowhere because even Mr. Trump has not been very speaking about positively about the backroom talks that are going on undoubtedly between the Iranian side and the American side. So crude oil, which is the first indicator of crisis here, was up 6% today and ended close to 97 as I speak. So this impact was naturally felt by the markets. The second aspect here is that the dollar index strengthened today marginally to almost close to 100, and the US interest rates also slightly hardened 6 basis points, and Indian interest rates hardened. But RBI did a very good job of defending the rupee today and it actually ended below 95 at 94.99. That was a geopolitical backdrop to the action today. And so why did the FIs continue their selling? Even on the 21,000 crore selling on Friday, there was a significant amount of normal FI selling in addition to the rebalancing impact. So the FIs continue to be negative because the oil situation, right, is not yet comfortable from a fiscal perspective for India. Yes, today also there was a price hike in the LPG cylinder, but honestly, the FIs are expecting a far greater, transmission of the imported oil prices into the economy. Well, the government is obviously hesitating to do a big thing and are doing it in small doses. But from FI perspective, if they don't do it in a significant way, the impact is going to be on the fiscal, on India's risk rating and the rest. So that's why this selling pressure from the FI perspective. Now, there's no right or wrong from me on this, right? It's just the compulsion of politics that's involved in this, but FIs take their own viewpoint on this. So they sold across the board, but more importantly, with this happening, see, the biggest event this week, which is going to drive the market the whole of the week, is the RBI policy. I know there's also a GDP data release, but to me, that's less important because that's more about the quarter gone by and the year gone by, right? It's the RBI which in its policy is not only going to take a call on the interest rates, but it's also going to take a call on the outlook of accommodation neutral or hawkish. It's also going to give you the data around the GDP for the next 4 quarters and the inflation for the next 4 quarters. And is also going to opine on the fact that is it going to treat this imported oil-related inflation spike, which is expected when they release the data, to be a short-term spike, a transient, as to use the American language there, or do they see it as a lasting impact? Now, the fact of the matter is, everybody is aware that the consensus estimate of RBI is for hold, but there's a small proportion of people expecting a rate hike, especially from overseas, who are saying that RBI has to do it to attract foreign flows. But if the RBI's successful defense of the rupee at the 95 levels is any going, I'm not sure RBI is going to think of that as a necessity now. It's more, in fact, also the fact that this oil crisis, Brent crude spike crisis, is also going to lead to a slowdown of our GDP. So RBI is unlikely, according to me, to go in with a rate hike to further slow down the country's GDP. But the language of the policy, the press conference after the RBI speech announcement is very important, because it's about how the RBI views it forward. Is there a rate hike likely in a later policy, maybe even by December? So these are the things the markets will look towards. And today I saw the first signs of that, because the worst hit sectors today were the rate sensitives. Public sector banks, consumption, durables, auto, real estate, realty. All of those were the ones which corrected almost 2 to 2% today. So clearly the market, and whether these are FIIs or DIIs, it's going to be hard to say, but clearly given the advanced decline ratios, it's across the board that there is a rate sensitives are beginning to feel the heat, and I would expect this to continue for the rest of the week till the RBI policy actually happens and there is a clarity around this part. So I think that's an important point to bear in mind for this week. And because of that uncertainty, banks, actually the DIS bought 5,000 crores. What did they buy? So the only two sectors to end in the green today were IT, which was up about 2%, and metals. Well, metals, you can correlate it to the fact that they are positively linked to the fact that when whatever damages occurred, there's been some damage to aluminum-related production centers also during the war. So there is a metal kind of a shortage scenario building up. So generally, geopolitically, it is a safer bet, but it didn't go up much, 0.4%. But at least 2.25% rise is something that's important, because the rupee also strengthened today. So there was no clear, and I looked at the swap points for the 1 year forward, it's just hovering around 280, 83 basis points, which is roughly a 3% interest differential, which is fair enough, because the US-India interest rate differential is what? India is about 7, US is about 4.5, it's 2.5, so 3 is okay. So it's not that the market is unduly expecting a big rupee depreciation as we speak today for to have caused the IT to spike today. Even on Friday, it was among those which fell the least, I think. So the point is that probably, and we have talked about this in my previous things, that IT has corrected such a lot, and we are getting some positive news from some US counters. So there has been some rally in the NASDAQ. Accenture's stocks seem to have rallied a lot. That software is winning back. That is, they're getting the right at the table with their customers to be permitted to bid for an AI rejig of the user companies. So I think that in TCS also, I think mentioned sometime that all of his 150 customer base, most of them have requested, kind of asked them to see whether they can handle their AI transformation. So that's a new line of business emerging, and I think there was also some specific news around Wipro's thing which was there. So this is driving it, but it is a value-driven rally. What I'm trying is, it's corrected more than 20% since year to date. So there's a lot of correction. Obviously, the valuation models are figuring out that IT's business is going to completely die in 5 years, which is not the truth. So there is a value in buying, but I still wouldn't call this a growth-oriented buying. So just bear that in mind. But definitely, tactical short-term players are going to be entering and exiting IT, and you will see IT gain on some days and not so on some other days. So it's going to be a very volatile sector, though one would say that it's also less affected by crude and everything. So it's also a safety play in these terms. So with that, I'll end this chat today. I look forward to catch up with you tomorrow.